right. So strategy number two will be regarding your contributions into superannuation fund and how you can optimally utilize the contributions to your super fund to get the best tax outcome. So what is a concessional contribution? Concessional contribution is when you contribute to superannuation fund out of your pre-tax money or pre-tax income, and which is different to non-concessional contribution, which is made out of your post-tax income. So the concessional contributions typically include your employer superannuation guarantee charge. So the employer makes your contributions on 9.5% on your salary. Any additional concessional contributions your employer will make on top of 9.5%, which is called a reportable employer contribution, and that could be voluntary from the employer, or it could be in the form of a salary sacrifice which you make by way of an arrangement with an employer to make extra contributions out of your salary to your superannuation. And also direct voluntary contributions if you make directly to your superannuation, which you can decide to make up to the total cap of $25,000. You can decide to make those contributions within the financial year anytime directly to your superannuation fund. So for the taxpayer who is looking to claim the concessional contributions during the year has to notify the super fund of their intention to claim the superannuation, but they need to make sure that the payment is made and received by the superannuation fund by the end of the financial year to be able to claim the contributions in that particular financial year. Again, the limit for, or the cap for the 2020 financial year is $25,000 per taxpayer, and this could change in the future, but at this point, it is $25,000. So, if you are accidentally have made contribution above your cap, or your employer has made additional contributions, or you are in an income bracket where 9.5% contributions could be more than your cap, you can, or if you make voluntary contributions, you can look at deferring your contributions into the next financial year, or you can use the reserving strategy. If you, let's say, if you make contributions to your own self-managed super fund, you can make an additional contribution by utilizing the next year's cap and claim the deduction in this year, but you have to notify the super fund that you will use the reserve strategy to utilize the next year's cap, and that will be adjusted towards your concessional contribution cap of next year. That strategy is generally can be quite good, where you have, let's say, a sudden capital gain you made on the sale of an asset, and you want to just top up your superannuation in that particular year to reduce your taxable income. Now, previously, if you are an employee and you wanted to make extra superannuation contribution concessional, you will have to make a salary sacrifice arrangement with your employer. That means you need to give him a notice in a timely manner, so that how much salary sacrifice you want to make, and then he can start topping up your superannuation by deducting extra from your salary and make a payment to your superannuation fund as a reportable employer contribution. But now you have an option that you don't really need to salary sacrifice. If you want to make an extra concessional contribution, you can make a voluntary contribution directly to your super fund just before the end of the financial year. This is quite helpful where you are not able to plan your cash flow, whether you're going to be able to afford to make an extra salary sacrifice. And also, you don't know if you have any particular situation where you were expecting an extra income before the end of the financial year, like if you received sudden dividends, or you received a capital gain on the sale of an asset like a property or the shares, and you then want to reduce your taxable income, you can make a voluntary contribution. Previously, you were limited under the 10% employment income test, which is not applicable anymore. and it is quite helpful. Again, for in case of the businesses, they need to make sure that they make the contribution for on behalf of their employees before the end of the financial year. In case they want to claim for that particular quarter in that particular financial year itself. Normally, for each quarter, you make a superannuation contribution within 28 days after the end of the quarter. But the 30th of June will be paid in July, so you will not be able to claim a tax deduction until next financial year. But you can bring that forward by paying that before 30th of June and then be able to claim. So that's helpful in having a bit of a planning in managing your taxable income for that financial year. All the contributions you will make to the superannuation, Superfund will have to pay 15% contribution tax on that. So you need to consider your taxable income if you are topping up your superannuation contributions. If you are in a higher tax bracket, let's say you're in a 32, or 37 or 45% tax brackets, you then should consider that what is the differential between your marginal tax rate and the 15% concessional tax the Superfund will pay, and whether that is beneficial for you to make extra contributions. Sometimes you could be only in a lower tax bracket, like 19%, and it might not be that much beneficial in that particular year, unless you have different reasons as part of your financial advice process. You've been recommended to, or you have a strategy to increase your superannuation balance. So, I mean, you can see in case of a company which is taxed at 27.5% as a base rate entity, uh, if you are making contributions, reportable employer contributions on behalf of a director, so you save 27.5% tax, uh, but the Superfund is paying 15% tax. So you need to see whether the company is distributing income to you in that particular financial year and is going to tip you above, that particular tax bracket, and you go into a higher tax bracket, and there are benefits of making an extra contribution to use that margin in your favor. Then you can look at contributing more, but you need to do that comparison to see there is an advantage to do that. Now, there is a rule for a carry forward of the concessional contribution tax. So let's say in a particular financial year, your cash flow did not allow you to make full use of your concessional contribution cap of $25,000. You can carry that forward in the unused cap into the subsequent financial year, and you can carry that forward up to 5 financial years. But your overall superannuation balance needs to be under $500,000 to be able to use uh, this benefit of carry forward. So let's say in a particular year, you were able to use only $12,000 out of your $25,000 cap. You can carry forward 13,000 to the next financial year. And similarly, if you in the next year you still have an unused cap, you can carry that forward as well. And in total, you can carry forward that up to 5 years. And in a particular year, you might be able to use the entire balance suddenly if you have a very higher income in that particular financial year. So you got that in your bucket to be able to use in a particular year where your taxable income is expected to be very high. Just quickly on a government co-contribution. So that is when you make a after-tax contribution, a non-concessional contribution. So you cannot claim a tax deduction for that. So if you're earning less than 53,564, you can make an after-tax contribution, and the government will co-contribute up to 50%, subjected to a maximum of $500. So if you contribute $1,000, government will co-contribute $500. So if in any particular year, if your taxable income is lower between 38 to 53 grand, and because that is phased out between this income bracket, you can look at getting that extra top up from the government by making an after-tax contribution. All right. So um, we will now move on to strategy number three, which is you can use in your business by way of prepaying certain expenses. And how can you legitimately move some income between the financial years to able to get the best tax outcome in that particular financial year or the subsequent year.